Have you ever looked at your investments and thought, why is this one not doing as well as that one? Maybe you've considered selling the one that's underperforming and putting the proceeds from it into the one that's been overperforming. It's a very common and understandable thought. In fact, the other day I was reviewing a portfolio with one of our beloved clients, and she was saying, look at this one, it's underperforming. Shouldn't we take the proceeds out of that and put it into what's performing the best? In this video, I want to share with you why chasing last year's best performers can actually hurt your portfolio and why your diversified portfolio is already serving you best. To illustrate this, let me share with you this chart, this Callan Investment Periodic Return Chart. This shows you year by year which investment asset class, large cap, small cap, mid cap, growth, value, domestic, international, short-term bonds, long-term bonds, intermediate-term bonds, etc., how they all stack up against each other in any given year. How do they perform over time? What this table shows is the incredible difficulty, if not impossibility, of predicting consistently which asset class will be the top performer in any given year. So if we were to follow this advice of selling last year's worst performer and buying last year's best performer, what would we in effect be doing? We'd be selling something after it had gone down, locking in a loss. We'd be buying something after it had gone up, likely at a higher price. This is selling low, buying high, the opposite of what we actually want to do. A lot of the time, last year's worst performer is next year's best performer. By selling when they're down, we miss the opportunity for recovery. And don't forget, constantly buying and selling can incur transaction costs and could potentially trigger taxes, which would further erode your returns. This is exactly why we recommend our clients build a portfolio that's diversified across a variety of index funds. Now, if we had a crystal ball that worked, I actually have one, and I don't know if you can see this or not, it has a sign on there that says out of order. If we could predict the future, what we'd want to do is always have your money in the top performing asset class. We would 100% be in whichever one is the top performer in any given period of time. But since that's impossible to do consistently over time, we diversify our clients across many different asset classes, each of which is going to have its day in the sun, each of which will serve the purposes of our investment portfolio over time. One thing you know by investing this way, whichever asset class is your top performer, some of your money will be in it. Whichever one of them is the worst performer, only some, never all, of your money would be in it. Our goal isn't to pick the best performer every year, because that's impossible. Our goal is to participate in the growth of the entire market over the long term, reducing risk with diversification. While it's tempting to chase what looks good right now, history shows us that last year's best performer is rarely next year's best performer, and that a balanced, diversified investment strategy will serve you best. What's your greatest concern about your investment portfolio? Let us know in the comments below. And for more on investing and retirement planning, watch these videos next.